Las Vegas is famous for constant reinvention, but lately something unsettling is happening behind the neon. More than 10 casinos on the Strip nearby and in local neighborhoods have closed or vanished in just a few years. Booming new mega resorts distract us, yet dozens of affordable gambling halls are gone for good. If Las Vegas was built to always expand, why is it shrinking in plain sight? The answer reveals how much the city and its future are really changing. Before the era of billion-dollar resorts, Las Vegas thrived on a different model. From the 1940s through the 1980s, dozens of modest casinos lined the Strip and downtown, many run by small operators or backed by organized crime. These properties survived on low overhead and steady streams of both locals and tourists, offering simple rooms, cheap buffets, and affordable gambling. The business required little more than a decent crowd, some slot machines, and a willingness to take risks. By the late 1960s, corporate interests began to replace mob control. Small-scale operations could still compete. Everything changed in the 1990s. The opening of the Mirage in 1989 launched a new era of mega resorts, massive high-rise complexes built on a scale that dwarfed the old casinos. Integrated resorts like MGM Grand, Bellagio, and Venetian arrived with price tags in the billions, offering not just gambling, but entertainment, shopping, dining, and luxury hotels. The capital required to build and operate these properties pushed out smaller competitors. Land values soared, and the economics of the city shifted. Now the days when dozens of independent casinos could coexist were over. Survival demanded size, spectacle, and deep corporate pockets. Casino closures in Las Vegas fall into three main categories: flagship resorts on the Strip, smaller properties near the Strip or in older corridors, and locals casinos serving residential neighborhoods. Each type faces a different set of pressures, but together they reveal a pattern that goes beyond isolated business failures. Some closures are highly public, like the Mirage and Tropicana, with press releases and demolition dates. Others happen quietly through long-term shutdowns, demolition permits, or removal from the Nevada Gaming Control Board's active list. In total, at least 10 casinos have either closed permanently, stayed shuttered after 2020, or disappeared in the last 5 years. These cases are documented through operator announcements, county records, and regulatory filings. That evidence makes the trend hard to ignore. If you are interested in seeing how these forces are reshaping Las Vegas, please like this video and subscribe if you want deeper explanations about how Las Vegas is really changing behind the scenes, beyond marketing and headlines. Next, we will look at these 10 closures in detail to understand what is really driving the change. Mirage closed its doors in July 2024, ending a 35-year run as the first true mega resort on the Strip. The sale to Hard Rock International for $1.16 billion was less about declining business and more about what the land could fetch. At more than $30 million per acre, the property's underlying value far outpaced its annual casino profits. The plan is to demolish the iconic volcano and replace it with a guitar-shaped tower, reopening as Hard Rock Las Vegas in 2027. This is not a story of failure. It is a calculated move, with MGM Resorts shifting resources toward higher-yield assets in its portfolio. Just months earlier, Tropicana shut down in March 2024 after 67 years on the Strip. The 36-acre site is now cleared, with Bally's Corporation and city officials eyeing a partnership for a new stadium for Major League Baseball. No funding has been secured, and the timeline remains uncertain. But the land's value, bolstered by its corner location and size, drove the decision to close rather than renovate. The casino's final night was marked by farewells from longtime employees. The real action happened in Clark County permit offices, where demolition paperwork moved faster than redevelopment plans. Near the Strip, the Royal Inn vanished with barely a headline. Demolition permits were quietly amended in April 2022, and within 18 months, the land changed hands twice, each time at a profit. Speculators saw more potential in flipping the parcel than in running slot machines. Meanwhile, Wild Wild West, just off Tropicana Avenue, reopened post-pandemic but closed for good in 2022, with station casinos citing unprofitability. The property's future is now tied to redevelopment, not gaming. These cases, some public and others buried in county records, reveal a clear pattern. When the land becomes more valuable than the casino itself, closure is a business decision, not a defeat. Neighborhood casinos once served as gathering spots for Las Vegas residents, places like Poker Palace, Eastside Cannery, Texas Station, Fiesta Henderson, and Silver Nugget. Each closure pulled at the fabric of its community in a different way. Poker Palace, a fixture on North Las Vegas Boulevard for over 50 years, closed its doors for good in October 2025. A WARN Act filing listed 126 layoffs, affecting dealers, waitresses, cooks, porters, and security guards. Many had worked there for decades, often living within walking distance. The job loss rippled beyond the casino floor, touching nearby shops and restaurants that depended on regulars coming by after their shifts. Eastside Cannery on Boulder Highway never reopened after the pandemic shutdown in March 2020. Demolition plans were filed in 2024, confirming what many already suspected: the property would not return. Boyd Gaming, the owner, cited shrinking margins and competition from online gambling as reasons for walking away. Texas Station and Fiesta Henderson followed a similar path. Both were locals' favorites, especially for families and retirees looking for affordable entertainment. Station Casinos announced in September 2022 that both would be demolished, with no immediate plans for replacement. The company described the decision as portfolio optimization, but for those who lost their jobs, the language felt cold. Silver Nugget in North Las Vegas shut down in 2023 after a utility issue. With no official reopening announcement, the silence spoke volumes. The pattern is clear in the numbers. 5 local casinos have shuttered since 2020, with hundreds of jobs lost and entire neighborhoods left without their social hubs. For many, these closures mean more than lost wages. They represent the end of familiar routines, erased almost overnight. 5 forces shape the wave of casino shutdowns across Las Vegas. First, the value of land has soared. Prime strip parcels are now fetching over $30 million per acre. For many owners, selling land or redeveloping it is simply more profitable than running a casino. Second, operators are consolidating. Major companies like MGM and Station Casinos are focusing investments on fewer, larger resorts that deliver higher margins, a process sometimes called portfolio optimization. Closing smaller properties can be a strategic choice as firms pursue scale and efficiency. Third, tourism patterns have shifted. Visitor numbers softened since 2020, and more travelers are seeking experiences beyond gambling. Online betting and competition from other destinations drain demand, especially for smaller properties that cater to local players. Fourth, operating costs have climbed. Rising wages, higher utility bills, and increased regulatory expenses make it harder for modest casinos to stay afloat, especially when margins are already thin. Finally, the pandemic left deep scars. After the 78-day shutdown in 2020, at least 16 casinos never reopened, and several more closed in the years that followed. As one UNLV scholar put it, these closures are less about individual failure and more about a system that rewards scale and efficiency over tradition. On the Strip, the largest resorts have not only survived but grown stronger. Properties like Bellagio and Wynn have reported higher revenue per available room, even as overall visitation dipped in 2025. With fewer casinos open, demand concentrates in these flagships, allowing them to raise prices and cut back on lower margin offerings. Meanwhile, the landscape for locals looks very different. Since 2020, the closure of at least 7 locals casinos, including Texas Station, Fiesta Henderson, and Eastside Cannery, has erased thousands of affordable slot machines and table games from the market. Nevada Gaming Control Board inventories show a significant drop in low-denomination slots, shrinking the options for residents who once relied on these venues for accessible entertainment. For tourists, the experience has shifted toward glossier, more expensive destinations. For locals, the loss of neighborhood casinos means longer drives, fewer jobs, and less access to the low-stakes gaming that once defined everyday life in Las Vegas. The city's casino supply is shrinking, but the remaining inventory is more concentrated than ever. Today, the average price per strip acre tops $30 million, making smaller casinos an endangered species. As Vegas concentrates into mega resorts, affordability and variety fade. This isn't just evolution, it is exclusion by design. The city's future now depends on who is left standing and who is quietly priced out. Share your thoughts below.